Hey guys, how you doing this morning? Hello. Great to listen and cut the grass. Morning, everybody. Set my alarm for this one. Maybe I should make it a little later in the day, so you guys don't have like such a problem with the getting out, like for everybody on the West Coast and stuff getting up early. But I feel like if it's any later, then that cuts out everyone in Europe. It's hard. What's up, guys? I stays. Pancakes coming up. Nice. Good morning, everybody. How we all doing? Hey, Medved. For all of you that missed it yesterday, if any of you did, I now have to get a perm. So that's going to happen. No, I don't really care that much. I was going to get a haircut anyway. And yes, I missed it. I know a few of you did. I do. I do. I will get the perm. It was a rough week. Everyone deserves the perm. There's a big part of me that says just take the money and don't do it. But there's also a part of me that cares about this community. So I will sacrifice my luscious locks for GameStop. Is the appointment made? It's not, Eric Sarmento. And it is probably going to be really hard to make. I think you're going to get it and keep it. Probably, but just because of like laziness. Gonna dye it as well. Just a standard perm. No blue rinse. I'm not dyeing the perm. Also, I have like nearly black hair. Like color is not going to show up well, and I'm definitely not bleaching my hair. Hey, Ham Banana. Asian salon's the best. Half the price. Oh, I already know. I won't be mad if you don't do it, but I didn't donate. That's fair, Luna. Oh, what better half? Oh, no one cares. I didn't get a haircut anyway, so it's high time. It's high time. You guys can have your perm, and then I get a haircut. It's a win-win. It's a win-win. I'm gonna look at it like I got paid $3,000 to get a haircut that I've been putting off for weeks anyway. But what you have made me do, which is actually the part about this I hate the most, is I now have to go into a hairdresser's twice. Once for the perm, then again for a haircut. We're doing all right. Yeah, I'm a little tired. I didn't get a lot of sleep last night. I'm reading Fed documents, trying to figure out if and how this reverse repo market thing is linked. It was cancer. Acceptance in the grief phase. Will you live stream it? The perm itself? No. I live in like a two-party consent state, so most private businesses you can't film in. I have some Kit Harington vibes. I never said at what length I'm perming it. You guys seem to have this dream of me having like Charles the like fifth hair or fourth, but shouldn't need two appointments. Why not Alethea? Alethea, sorry. It gets so much shorter when you perm it. Don't worry, it retracts like half the length. Yeah, I know. I have a friend who like gets perms all the time. That's his deal. He gets like the top portion of his hair permed. Oh yeah, I know. I could get looser curls. I was thinking maybe like I'll do like a Simba, like adult Simba type hair, you know? Like just really big, luxurious curls and get some like nice shiny oil on them. All right, that's enough talking about the perm. Let's talk about the things you guys pay me to talk about in here. Oh, I'm gonna own it. I have. You guys still don't know me that well, but I have zero shame. I'm not embarrassed by anything. Smash that like button. Yeah, all 30 of you. Get in there on that like. It doesn't matter. It's a private video. You can hit the like button. You can not hit the like button. I don't care. What'd you find last night about reverse repo? So far, a big nothing burger. I'm still digging into it, but yeah, I haven't found so far any evidence that directly correlates the two things. Yes, they could hide money that way, but are they? I think see that's the half of the question that there's really no answer to. It does make me worry about bigger picture things more. Uh like the actual market crash, which I don't even know how that will affect. If the market crashes first, I don't know how that would affect GameStop. So you find evidence of how they're linked. Yeah, no. Any new stocks looking good. Just infotainment. Don't need financial advice. um, nothing on my scanners came up. My scanners were like pretty dead yesterday. Like the things I look for day trading, at least. Um, I'm still thinking I'm gonna roll. Like if the market crash doesn't happen, I'm just gonna roll these SPXX options. Maybe roll them down to a lower strike. Um, also probably want to pick up some more short 20-year treasury ETFs. Just like for the humility. How are you hedging? Are commodities just talk or all these price increases and supply chain issues? like against inflation. I mean, I don't have to. So as a day trader, right? Like, so as a day trader, most of my capital is like in my account. If I was an investor, then I would be really worried about hedging and protecting my money. But I'm not. I mean, like, obviously, inflation's gonna hurt my previous gains, right? Like cash on hand. But I mean, I can take the 5% loss. Well, I guess most of my money's tied up at GameStop, actually, currently. The commodities, I don't know. I haven't paid attention to the commodities market recently. What are you referring to? Gravy no glitter. Negative beta theory baloney. No, it's just a negative beta is just a trailing indicator. That's all. It just tracks what has happened in the past. It has no effect. Like it's not it doesn't cause anything, right? It's just a correlation, a measurement of correlation that has occurred in the past. If GME rips and the market's stagnant that day, negative beta is going to become increasingly more negative. If the market and GME rip simultaneously, then the beta would decrease towards zero or increase towards zero. Fucking negative numbers. Good thing its time was, it's only half a second behind or so. Explain your SPY against market meltdown strategy again. How do you win against that? I float kind of out of the money. So this is how I beat the market in 2020, at least, when we had the COVID crash. Is back when they started announcing COVID things. It actually ended up costing me a lot of money short term. I started buying like SPXS calls and VIX calls. Now this was like around January. What was it, like shortly before the short squeeze? I think it was like January 25th. I started doing this, or not before the short squeeze, but before the market crash. Um, and then the market tanked in March, but I was buying these like 2 weeks out and rolling them. If I'd gone back in time, I would have bought them just at the correct date, right? But I had no idea, so I was buying them 2 weeks out and rolling them on the weekly. I think I had 40 SPXX calls, and like for UVXY, I had 20 calls. And then when the market crash finally came about, right? Because like global pandemic, it's already started to spread by January. It was pretty obvious that would have like an economic effect, right? As like we started to know more and more about COVID. And so like I just kind of waited for the downturn. I expected a correction. It corrected far more than I anticipated at the time. But I managed to get out of all of the SPXS calls, and let me see, about uh 10 of the UVXY calls in time. When the VIX spikes really hard, it doesn't always stay spiked for that long. Also, the liquidity was an issue with me trying, because I wasn't trying to exercise them, right? I was just trying to sell them. But that was kind of my plan at the time. Watch any good movies? Yeah, I watched the one about that reporter. Oh god damn it, I can't remember the name of it. It's about the reporter who like found the Contra link with the CIA, and they were selling cocaine in like the inner cities to fund the narco war, like the communist narco war in Nicaragua. No problem, gravy. Is SPXS a good inverse to the SPY? Don't have access. So if you're trying to short the SPY, SPXS is not very good, right? Like if you're playing like a $5 correction, right? So like say the SPY is trading at like 24 and we get a dip down to 20 pretty rapid, or 420 rather. It's trading at 424. And we get like a quick dip, like this isn't going to like really print the SPXS. Um, just because like the SPXX moves slower. Um, so like this is better to like in this instance, it's better to short the SPY or find a ETF that's not weighted, right? But if you expect it to go from like 424 to like 300, then this is going to print super hard. So it's good if it depends on what you're trying to play, right? Like the SPXS is like you're trying to play a market crash, and then you can just buy puts on the SPY if you're playing like small, like intraday, like $1 correction or something. Always remember when you're doing options on the SPY has like 3 option states a week. It's like Monday expiry, right? And then it's like Monday expiry, Wednesday expiry, Friday expiry. So always pay attention to your dates really closely. And never assume that your date is just for that Friday because you picked like the top row or something. That's an easy mistake to make. I've made it. So I feel like hearing financial advice, Fred's articles about pending food issues. Yeah, Kraft Heinz is like a good inflationary hedge, or at least they were the last time we had inflation of any significant amount. Um, any grocery store, right? Because like the inflation isn't isn't taken out of their profits because they like buy from a distributor, right? And then they mark up their profit and then they sell at markup, right? And so like the inflation hits the distributor and it hits the consumer, but grocery stores are protected. Their business model protects them because they're essentially a middleman. The distributor is too, but the distributor has to buy product from the farmers, and so they have to pay inflation costs, or farmers or manufacturers, right? Kraft Heinz does well because in the event of a market crash, like people still have to eat. Yeah, that's correct, Danger Dan. It the negative beta indicates what has happened. Like in January, like the SPY went down, GME went up of this year. And like drastically, right? Like the SPY went way down, GME went way up. And that's created a lot of the negative beta you still currently see. How often do you do covered calls, married puts versus stuff like bear call, put spreads, iron condors? Not that often. A lot of them are really specific, like straddles are really for like earnings. And like what a straddle is you if I remember how to do this right, is you essentially buy you buy a call, sell a put. That might be backwards. I haven't done a straddle in 2 years, so forgive me for this. The idea is that essentially you buy it like before earnings, and then whether the stock goes up or down, you make money, but you just make like reduced potential profit. I don't play earnings. And that gives you reduced risk. Like if you don't know what the earnings are going to do, or you don't have a plan. So like if you bought a straddle on GME's earnings, right, you would have made money off the 2-day decline into Friday. Oh, and you buy on a straddle, you buy near out of the money. So like on either side. I don't really use a lot of the more advanced option strategies, honestly. Most of them are designed to reduce risk. Um, Sometimes I'll do spreads. Spreads are pretty simple. You just buy increasing strike prices. I will sell covered calls, and I have done cash secured puts. Those are my probably most common option play besides like swings or YOLOs. Not really YOLO often. Any added fee for rolling a call? Well, you lose the premium, right? So it's whatever the difference. So if you roll, say like you buy an option on Monday, right? Say you bought like a 250C on GME and it was like 1450, and then it expires Friday, right? So 4 DT, 4 days to expiry, and Wednesday, um, the stock kind of runs up, but you want to carry the call. So say it goes up to like 1550, you sell, you buy next week's call at like 1650 at the same strike. You're out $100, but you bought yourself 4 more days of the option, right? The problem with this is if it runs against you and you still want to roll, then you're going to be out even more, right? Like say it drops to like 1250 and next week's is still 1650. You got to pay $400 for those extra days. And all the popcorn. So basically puts on AMC. Yeah, people don't go to the movie. Actually, well, the last data on that's from like the 1920s, so it's probably not very reliable. But people went to the movies a lot, and during the Great Depression, but it was cheap, right? It was like a very cheap way to do something fun. Like now we have cheaper ways of doing that same thing from home. So unlikely that that would play out the same way twice. Although that kind of logic sticks around in the market for 100 years, you know, that like the way kind of the way like hedge funds think and stuff is like they'll be like, oh, I read about this thing in school where like people went to the Nickelodeons during the Great Depression and they were very successful, and they'll be like, okay, I'm gonna buy AMC or like whatever for as a hedge against an impending market crash. And it's like obviously that business model has changed over 100 years. Like people's sentiment towards it has changed. And like while there are still people that go to the movies, it's less likely that in the event of an economic downturn people are going to throw, you know, $100 a week at going to see a movie, right? But that won't stop them from investing in it. That's the analyst's job, right? The analyst goes, "Don't do that," and then like they're like, "I'm gonna do it anyway." Yeah, the Russell 1000 announcement's definitely gonna create some stuff, but that's later this month. That's not this coming week, but the next. Yeah, it's the next week after. So don't worry about like not a lot's gonna happen probably until that week, as far as that goes, unless some ETFs buy in advance, or institutional ownership tries to get in before the ETFs. That could be interesting. It's a long play. What's a long play? Frustrated channel. Shortages. Oh yeah, commodities go up during inflation. I see what you're talking about. Yeah, they also go up seasonally. There's like very good times to buy commodities. Like seasonal commodities is almost like guaranteed money. Very risky, the commodities market, however, and it moves fast. Have you seen The Dissident? No. Speaking of movies and Justin Timberlake, In Time, an older. I've seen it. It's got like an interesting premise. Gravy. You you bought those pre-crash SPXS and UVXY calls at a strike below the price, and the market went way below, and your calls were in the money. No, windmill. So the SPXS is short 3x the SPY, right? So I bought these like way out of the money calls. I could actually go back and look at like the actual PTs at the time. Hold on. So nope, those are the calls. 1 second. Let's go to the weekly. So it's here. Daily. So it's like, so I was buying, let's see, in January when I started buying these, I was buying them at, I think these were at like 130. So I think I was buying like 160s and 180s. And then when the market crash occurred, it hit like 288.50. I sold before that though. So so I sold most of them here. And then I had a few left over like right around here. So I think I sold like it was like 30% of them here, and then if I remember correctly, I sold like 20 here, and then I was like 50, 20, and then 30. Because they were options. So first I covered my like cost basis, and then I took profits. Boop, boop, boop. About the calls, it was straight, and the market went way below, and your calls were way, yeah. So They added the 800 calls during some of the market halts. Was this normal? Yeah, that's perfectly normal for them to add further and further strikes. Right, because they want to make money off that volatility. Especially if you like bag hold them, right? Like if you bought like when we hit $400 in January, if you were buying an 800, right? It was probably astronomically expensive, right? And then if you bag held that and like we went down to 250, it'd be worthless. So I'm sure they made a ton of money off this, like whatever market makers were selling them, or people with hundreds of GME shares. It's like the play I made in March when I suspected that GME was going to crash. So if we go back here, I sold a covered call like right here when we hit like $320 on the way down from 350, but I sold it for like over $10,000, and then it got returned to me like I think like right here. Yes. So SPXS and UVXY are inverse. Well, UVXY is not inverse, right? If the VIX goes up, UVXY goes up. If the SPY goes down, SPXS goes up. So you would buy calls on the market going down. That's the point of confusion, I'm sure. Because it's already short the SPY, so it moves inversely. Yeah, there wasn't Netflix back then. What's that purple line for? Those are the possible support resistances for I haven't done the TA for this week. So they're kind of irrelevant right now. I'm gonna have to refactor things based on that sale of 5 million shares, which I'm still very sure of. Have you seen the documentary Trading Places? I know that pork belly futures are super risky. That is not a documentary. That is a fictional account included in the preliminary. Hmm. I mean, if they're getting deleted, they're getting moved, right? Like maybe to the S&P 400. I don't know what the. I don't pay too much about pay too much attention to like index listings and the requirements, but yeah, similar to exiting a squeeze or any other run up, except it was over several days that the market tanked and SPXS went up. But yeah, essentially still the same. I exit most runs exactly the same way. Information which I have shared with you guys. Acting as a market maker is like probably the least risky way to play options, like lowest risk. But you have to be careful, right? Because if you're selling cash secured puts, right? You don't want to get assigned. You don't ever want to own the stock, right? You just want to sell the options and collect the premiums. And then with covered calls, like, so what I usually do is, like, if I get assigned, then I will sell covered calls. Unless I just own a bunch of the stock. Like, I've been selling covered calls on UWMC because I have like 1,000 shares of it, but I have that for other reasons, right? So I've been selling them like out of the money because I don't want to lose my underlying. That's correct, Windmill. The SPXS is inverse to this S&P, and the UVXY is not inverse to the VIX. It's correlate. They're a direct correlation. Any juicy predictions for the next? I think we're gonna go back up, like probably Monday, Tuesday. I think we're gonna return to this pattern that we've had. If the sale's done, which I presume it is. Enough to sell covered calls early on, but haven't figured out how to play it. Too scared it'll trigger the MOASS. You don't want to sell covered calls on GME, right? I sold one in March because I knew that if they crashed it, it would take a very long time for the price to come back up, right? And that's why I assumed they were gonna try to crash it. That was like my first indication. Because I already knew at that point that the short interest was too high for them to cover. And so my assumption by then was that they had to drag it out, right? Like that's their only option. So I knew that like when we hit this peak that they were going to try to flash crash it 30 minutes before it, or like a couple hours before it. Market Watch came out with an article, which thankfully I was notified about on WeBull, that said that the stock was like trading at $110, right? And so I got what shares I had available at the time and sold covered calls on them. But now, if you sell a covered call at like 250, right, on GME, with say you own 100 shares, like yeah, you'll get an awesome premium, right? Because GME is way up. Like, but if we go above 250, you're gonna lose your shares. Your shares are gonna sell. So you're gonna get $25,000, but you're no longer gonna own any GME. That's why because if you've owned GME and you've had it for a while, your shares are accounted for, right? They're real shares. So if you sell those, you're giving the shorts 100 shares. Theta Gang enters the room. June 11th, 18th, 24th are all record dates. But I think the 24th is specifically for the Russell 1000, right? I had this in my DD like a couple weeks ago. I can check. Was it 6-1 that I wrote about this? No, it's before that. It's probably like way back. I'll have to find it. 11th, 18th, 25th. Oh, okay, 25th. Yeah. I think the furthest one out is the one that we're looking at. What publications do you follow or find legitimate? So I follow whatever information I can get, right? But you have to get really good if you want to do this long term. If you're really interested in the financial markets, the first thing you need to get good at is disseminating information, because all the like you're given a lot of information by the media, right? Because like they do research and they have a lot of research tools, But the way that information is presented to you is not always factually accurate, right? So you have to like kind of parse it and find and pull out the parts that you need. But I read everything. I mean, whether it be Motley Fool or Market Watch, like I read them. I just don't think that their ultimate thesis is true, right? But there's information in those articles that you may not get anywhere else, right? Because they have sources on Wall Street, like they have access to massive research databases that the general public just doesn't. And every once in a while, they let something slip that maybe they don't intend to, or they don't understand the importance of, or the impact it could have. And that information is valuable. And so while I say don't believe the media, right, you should still read what they write. If I was really ballsy, I'd sell covered calls in my AMC pile. Oh yeah, I would sell covered calls on AMC anyway. AMC's definitely got awesome premiums right now, and a lot of people that own a lot of it own quite a lot of it. So not selling covered calls on it to me would be silly, but you never know. Or at least like weeklies. I would sell weeklies on it. Because what's the worst that happens? Like it's AMC, right? You get you like get your shares called away, and you sell your shares for $50 a share, plus you collected the premium. Oh no. Their wording is super sneaky too. Yeah. Yeah, you have to be very good at like cutting through the bullshit, which is easier the more knowledge you have, right? Like the longer you do this and the more you study and the more you research, the more overall knowledge of the mechanics of the market you'll understand. And then it's very easy for you to go, okay, well, all of this paragraph is complete bullshit, but this sentence where they're discussing this data point from X, Y, or Z is, statistically relevant or useful information for your thesis that you're building independently of them. Don't get your thesis from the news, right? Build your thesis yourself. That's really important on any stock, any investment that you're interested in. Even if you've like somebody has done an amazing DD, go back and run through it. Find out why. And that's what I did with GameStop with DFE. I was like, wow, this is an amazing DD. It's like I almost don't have to do any work, right? But I still went back and did all the work myself to ensure that I had the conviction of the investment and that I had formed my own thesis. Now those theses lined up, right? Like I agreed and ultimately ended up agreeing with DFE's thesis and moving money into GameStop. But if it had not, I might be in a different position today, right? Limited access to 401k and self-directed brokerage. Mutual funds only. Would FTXD be worthwhile to park money in? For the squeeze, 13.2% GME inside. So for 401ks, I'm not super versed in retirement accounts. I don't know what actions you're limited to. I presume as it's like a retirement fund that you're like limited to like ETFs and mutuals. So yeah, I mean, if the squeeze happens, I don't know if you can sell. I really don't know how it works well enough to probably give you any kind of good information on this, but a 13.2% weighted GME ETF would definitely go up a decent amount if GME squeezed. So yeah, if you can't like buy stock in there, I don't like 401ks. I'd rather just invest my money myself. I don't understand. I mean, I guess yeah. If you know nothing about investment, it's a way to park cash and Pick up some, you know, better earned interest, or like, better growth than you'd get out of like a savings account. But I mean, for me, I would just invest my money myself. I wouldn't. I guess employers match them, and that's the benefit. Is that like your capital that you invest in them is theoretically doubled, right? See, I don't know that much about 401ks. That's more of like an investment banking type thing, and that's not really what I studied. My background's more in like mathematics, like market mechanics, like implied um probabilities. So like if I went to go work on Wall Street, my job would be most likely in trading, like high frequency trading. Russell 1000 updates on June 4/11. So yesterday? Okay. Thank you, Medved, for looking that up for us during the stream. Yeah, I put the whole schedule in one of my DDs like a couple weeks ago. So it can update on 4/11, but it still has till June 25th to be fully reconstituted. Yeah, they telegraph real news and their lies. You're welcome, Hambanan. Skip news, not informed, read news, misinformed. Yeah, that's a pretty good synopsis. Also, it gives you an idea of what the other side's thinking, right? Like on GME, the news is a very good indicator of how the shorts feel, right? How their thesis is. And that's the thesis they're advertising. Shorts, it's really common with big short positions to do this. They spread a lot of negative media about the companies they're shorting, which makes it really obvious that they're shorting a company. But most investors will bail on that negative news. They do all kinds of shit. They'll hire law firms to file, like fictitious lawsuits and all kinds of stuff. And they'll be like, oh, this company's got a class action lawsuit against it. And like, then they'll advertise that in the media, which gets investors out, and like anything they can to drive that company out of business. And then once they drive them into bankruptcy, they usually offer them loans that they know they'll never be able to repay, right? And then lend them that money in order to like refacilitate them going back into business. And then they just crush them even harder again. And if they can repeat that, they will another time. And there's a lot of money to be made there. Stealing minded. Sell covered calls above the current price and prey on ever optimistic folks like Cornab. Now I feel like a bad person. There's no bad people in the market, right? It's just money. It's business. It, I mean, it doesn't make you evil. Trading money doesn't make you evil unless you're doing it for like a purpose, right? If your goal is to make money for yourself, right? Like there's nothing inherently evil about that. That's what our economy incentivizes, and our society. Yeah, if you sell covered calls and you don't want to get your shares called away, you're selling covered calls as that's a bearish bet, right? You're saying the stock won't get to this price. Selling my car for GameStop money, and the guy's coming over now. Can we watch these after the end? Yeah, I post them in the community chat, the whole VOD, right after the stream, so it'll be available there. Yeah. There's a lot of like game theory, and if you're very good at poker, you'll probably be okay at the markets. They're obviously a much harder game, but because they have so many more moving pieces. But it's definitely a good fundamental way to look at it, I think. I find that people that have played poker and then got into the market do pretty well. It definitely gives you a very steely resolve in the face of losing money. And as we saw yesterday with some of the people in chat, that resolve can break down very fast. I mean, even the $100 dip or $150 dip and $250 dip, $250 dip back in March. Like, it was scary, right? But it didn't last long enough for it to be truly scary. So like we dipped, right? And this is why a lot of apes held through it. Like a lot of apes on Reddit are gonna be like, I held through this, I can hold through anything, but that's bullshit. It dipped and then it like before the shock had even set in, right? It bounced right back. And this is why so many people held. If it had stayed down, they would have sold. If it had gone down to 100 and stayed there, the paper handing would have been tremendous. We would have been back at 40 in no time, which is what they hoped. But thankfully, it rebounded very quickly. And I'm sure whoever's bullish on this, whatever, knowledgeable investors are bullish on this knew that. They knew to buy when they flash crashed it. I mean, the market literally had news 2 hours in advance of the flash crash that the flash crash was going to happen, right? Which means that somehow the shorts analytical model, right? So their analytical model got leaked to the press. When we saw that happen this week, also. And this is why you read the news. So that means some fucking intern or lackey at some newsroom floor desk got a call, and some, back end analyst at some short hedge fund predicted that if they sell X number of shares onto the market, they could bring the price to X value. And that information got leaked to the newsroom. And this is how Market Watch saw into the future, guys. That information got leaked to the newsroom, and then that newsroom immediately sent that article out to a blogger, independent reporter, and they reported on that news far in advance of the actual attack. And so for people paying attention to that kind of thing, which serious professional investors do, they knew. And they were like, okay, so we're going to be able to buy GME at $100 a share in about 2 hours. And so they got all their funds together. And this was not retail FOMOing back in after their stop losses only, right? That was some of it. But they flash crashed it, and then they got a fire sale. They bought the best dip, right? Because their opponent showed their hand. Yeah, no problem, Danielle. So if it was really ballsy and really sure AMC was going to plummet, would sell cover calls below the current price. No, if you sell it below the current price, you'll just get a side. You're just selling. If you sell a covered call below the current price, you're just selling the shares at that price. So AMC's at what right now? $49.40. So if you sell a covered call at $49, right? You're just $49 strike. You're just selling your shares for $49. That makes sense? Because your shares will be immediately pulled away. What you want to do is, like, if you don't think AMC will hit 55, you sell a CC at a 55 strike, and then if it doesn't hit it, right, like if it hits like 54 and then comes back down, you just collect this premium and keep your shares. if you want to sell your shares, then you can sell like a 60 strike, right? And then if AMC hits 60, it sells all your shares at 60. Plus you collect the premium. Windmill Willie, I do not think you're fully understanding cash secured puts and covered calls yet. I would stay away from them. You're just gonna lose your shares. Possibly like less money than maybe what you paid for them. I don't know what your cost basis is or anything like that, but I would definitely do some more studying because you seem to be very confused on the way in which these work. Look up the wheel. Look up wheel strategy. Look up wheeling. Wheeling options. Or the wheel. There's some very good write-ups on that and how it's done. Some on Reddit, some on, like Investopedia. And that may maybe give you a better idea of how that works. How to market make. What's the difference between an option and a CFD? I think they're the same, Medved, but that is probably a question for Google, right? As my education pertains entirely to the US markets. I know some things about international markets, but definitely not well versed, right? I've traded in like Forex and stuff, and that's like technically like commodities and crypto, and those are international markets, but I've traded them in the US. So like as far as like how investor things work in European markets from like a buyer, like broker dealer perspective, I have no idea because I've never used a European or a non-US broker dealer, right? But I think they're the same. But look it up. Just unethical, questionably evil, and definitely malicious. But you're right, just business on their end. Yeah, absolutely. It's yeah. I mean, I guess it's unethical. But what if you're a short on GameStop, and you really believe it's a failing business, right? This is why shorting is important in the market. Is because if you really believe that thesis, then you should short it. And there was a time last year where they weren't wrong. Like the way in which they were shorting it might have been wrong. Um and like how they were accomplishing that goal. But the bear thesis on GME was decent, right? Like from a very unresearched perspective. Like it was a brick and mortar. It was failing. Most of their sales had moved to digital platforms. Like there was very good reasons for them to short GME, and everyone acts like, oh, them shorting GME was evil or Toys R Us was evil, and it wasn't evil, right? It's just a good business decision. If you see a business that's unsuccessful and you think that business is going to fail, it advantages you to make money off the failure of that business. Now, should we make money off the failure of businesses? Probably, if we want to maintain a capitalist society, right? Because capitalism thrives on new businesses being created, right? And in the failure of a large business, that presents an opportunity for many small businesses to take its place. And part of the problem with the way we handle our economy now, not that I think capitalism's the best economic model. I don't think socialism is either. I think there's far more obscure, far better economic models. But if we hinder that process, we're creating something that's not really capitalism, right? It's like a controlled capitalism, and that benefits the few, right? That benefits the way we've set it up is that it only benefits these major institutions that are too big to fail. And so no little bank can ever come in and become like a JP Morgan or a Credit Suisse, right? Like they'll just stay a little too mid-sized bank in perpetuity because the largest part of that market is dominated by these, like, four banks. Or and that goes with things uh like manufactured products. Like look at Apple, Samsung. Like and you can see that in the failure of companies like LG, and like as these other companies fail and fall by the wayside, uh Apple and Samsung just get bigger, right? And Microsoft, these companies just continue to grow and fill their market space because we don't really allow them to fail. We shouldn't have naked shorting, however. Naked shorting should be illegal. Oh, it is illegal, but it should be enforced. So, did you get to my question on the use of heavily weighted GME holding mutual fund? I sort of did, Eric. You can check it out in the VOD. I don't want to go over it again because we only have like an hour left, but yeah, I went as deep as I could into that. ETF options could. Not assigned, called away. Assignment is when you sell a cash secured put. They're a leveraged product. Yeah, okay. I don't know if all the same laws apply to them, AP. So that's why I'm kind of trying not to weigh in on the CFDs. But thank you. Yeah, if you can weigh in for them, that'd be great. If you feel like you have the knowledge to do that, go ahead. Oh, absolutely, Alethea. Yeah, she was reading into the wheel strategy last night, and it makes a case for paper. You should always learn the market by paper trading. Why not, right? Like, if experience and getting your hands in the dirt are the way you learn, don't lose money doing that, right? When you can do it for free. Like, I understand not everybody is gonna go like, pick up a book and become the best trader. Like some people need that experience, they need that practice. I think everybody does, as a matter of fact. Like I don't think you can effectively trade the markets without the like manual practice of doing it, if nothing else. Um, with your broker or whatever broker you're paper trading on. But also like some of the information you can get from doing that can't be found in books. Experience and knowledge, and it's priceless, essentially, right? Like, specifying ETF options like SPY and such can be signed early. Uh, Careful linking articles, hand banana. Like if Secure, just so you know, I know you're new to this. If Secure links anything, it's like information that I've read and approved already, because I don't want anything linked that I haven't read and that possibly has misinformation in it going out to the viewership and misleading them. So I haven't read that, so I deleted the link. Nothing against you. But just run it through me first if you can. If you found like an option thing that you want to share with people, let me know first, and then then you can share it. But let me at least read through it first. lawyering up loans. So yeah, that is scummy. Yeah, but those are tactics very specifically of predatory shorting, right? Smocks. Actually, they didn't do all that much of that on GameStop. They in the initial phases of shorting it, they just shorted it. It wasn't until more recently when they started to get trapped in those short positions that they started to use the media against GameStop. There's evidence of them doing that to other companies in extremely predatory ways. But GameStop was more of just a short position built over an extremely long period of time, kind of in secret, as I think the bare thesis they were operating on was, in their mind, very strong. Because all those tactics cost money, right? If you think a company's really going to fail, you don't need to spend that money to ensure that it does. Yep, synesthesiac. Sorry, I know I'm behind on the chat, guys, but I'm just trying to make sure I get to everything everyone's asking. So if you've got a question kind of in the lurch, I'm going to get to it, don't worry. It's not really just the lending. It's more that a lot of the failure of those businesses is brought on by these much larger cap corporations, right? So they've already taken the market cap before the smaller business fails. So there's literally no room for a new business to move into that space unless they have something truly groundbreaking, at which point they just get acquired by one of those bigger businesses. Yes. Okay, I think you're getting at windmill based on your last few comments. But keep reading. Like these are not things to enter lightly. This is not a casino, or it shouldn't be, right? Because you don't want the house to win, you want to win. And in a casino, the house always wins. What are some of the things you use in your scanners to find new opportunities? That's like asking for my social security number, Synthrum. um, there's some very general things I look for, like volume, volatility, um, increased open interest. But there's a lot of other things I look for that are very like personalized and tailored to the way I search for stocks, right? And like that's not a question you give away cheap or at all. Like if I make money with it, right? And I feel that given enough capital, I would make far more money off that information than you could pay me for it. And so I would not reveal it. And you should be very suspicious of anybody who does reveal that kind of information, right? Because that means they're not making as much money off of that information as they are off of you. Which means that information's not very good, right? So if someone's like, oh, here's my scanner, then, you know, clearly their scanner sucks, especially if they're like selling you their scanner. Like I give you guys like plays that I'm looking at for the day for transparency, right? Because I'm doing this as a service to the community, right? I'm very strongly against the belief that like everyone should just sit there and not make any money for a year or however long this takes to play out. It's already been 6 months, right? Imagine the amount of money and capital lost over those 6 months by people just like staring at WeBull but not utilizing anything, or like not even WeBull but whatever investment app, and just like not like sitting there with like maybe capital in their account and not having it. Like even if you'd invested in the SPY back after the spike in January, you'd have 10% more money today to buy GME with, or whatever rate of growth this SPY's experienced so far this year. It's been pretty nuts, actually. I think there's about a 2-minute delay. Well, no, it's just that I'm behind in the chat. There's not a 2-minute delay. It's about 20 seconds from when you guys type it till it pops up. And if I run into a question that takes a while, then I fall even further behind, right? No worries, Hand Banana. I know you're doing that for the best interest of the chat, and I appreciate it. But remember, like when we give out advice like that, or like here is the penultimate source for this information, people are going to trust that, and ideally you would want to encourage people to find that information on their own, and so it's their responsibility to find the best information about that they can, not ours. Need to be held back a few grades. It's not really being held back. It's like math, right? Like a lot of people have a problem with math. It's really common. They don't understand it. They're like, fuck math. I hate it. It frustrates me. But math is a language. It's just another way of presenting data so people can understand it. And the more you do math, the better at it you get, right? Like if you go to Italy and you don't speak Italian, and you live there for 5 years, you're gonna get okay at Italian, right? Like you're gonna kind of, and the stock markets will do that for you pretty quick, at least as far as the math you actually need to operate as a trader, which is pretty minimal. But that experience doing it over and over, and the repetition, that's what's priceless. That's the value in that knowledge. So don't think of it so much as being held back, but given the opportunity to learn instead of just trying to rush ahead. And like everyone's going to do that. I already know. Like everyone's going to be like, fuck this guy. I can do it today. You can't. You'll fail. You'll lose all your money. If that's money you're willing to lose and that's a risk you're willing to take, so be it. Some people feel that they learn better with skin in the game, but that also puts you in a position where you're much more emotional about your trades, which also infers more risk upon the positions that you're investing in. Whereas if you're super good at paper trading and then you just switch to real capital, right? Then it's just like playing a video game to you, right? Like you're not emotionally invested in beating a level of a video game after enough tries, right? You're just committed to beating it the way you know how to beat it. The repetition of it takes the emotion out of it for a lot of people. I find. I don't know. Maybe not. We're only allowed to mislead each other on the Discord. I mean, whatever you guys say to each other on the Discord, it's not my responsibility, right? It's an open forum. It's open to the public. So it is a public forum. Restaurant. Well, how do you find new stocks to invest in, day trade in? I'm fairly new and don't really know where to start looking. All right. That means don't worry about it. Don't worry where I find stocks. Don't worry what I day trade in. Learn how to do those things before you learn about where to find the plays, right? This is not a get rich quick scheme. This is a get rich very slowly over many years scheme. And you need to commit to that mentality. If your goal is to find stocks and play with them, you're gonna lose. You're gonna lose whatever investment capital that you have. You'd be better off buying a mutual fund and parking your money there. You'll make more money. So if you're new to this and you don't understand it, and you don't understand something as simple as where to find investments or how to day trade, then you need to understand those things before you worry about finding the thing with which to practice that information on, right? I hope that helps. But yeah, you're at a place now where you need to be learning, not doing. You are not yet ready to do. Because someone who is ready to do would not ask me that question. Can you explain seeing, drawing wedges during the peaks discussed in the exit strategy? I've read it, watched it, read it taught on Investopedia. I'm still not confident I understand. So in a wedge, something had a run up this week. What was it? ORF? ORF broke down, right? ORF. So let's go to the 5 minute on ORF. Zoom out. Let's look at. Is that all it got up to? I guess it started really low. So if we're looking at this, what date is this? 5/7. All right, let me go back on the 1 minute chart. Oh wait, no, that wasn't the run up we saw. Which was the run up we saw? Did they like remove the date? This was it, right? No. Was this at 6/7? No, it was. I feel like we saw this run further, didn't we? I mean, I guess this was the run up we saw. So let's go here. So yeah, this is kind of how this played out. So see here, we reach this peak of instability. And then the next candle, the volume doesn't fill the previous candle. So this infers that we're going to be forming a wedge or a flag of some sort, right? And so if we draw our lines here, this ended up breaking to the upside, right? And then that broke down into another wedge. Right, so you're coming from the center point, the up candle. Candlestick reading, just so everyone knows, is complete bullshit. But it does work in this instance, and that is a repeated pattern through every short squeeze and high price action thing I've ever come across in my years of trading. But essentially, like, this red candle confirms that you're entering a period of consolidation of some sort, right? And then this candle kind of confirms a breakout to the bottom, even though I realize this broke out to the upside, right? But, you know, volume traded all the way down here to 21 from a high of like 21.18. And then on the next candle, it ended up breaking up, right? But like, see how the floor across this wedge is very similar? So you just draw straight out from that up candle. And if you draw straight out from this one, you get another wedge here. If you draw straight out from this one, you get another wedge here, right? So as soon as that uptrend reverts, if you draw straight out from here, you have a wedge there that broke up, right? As soon as you get one candle going up and then another candle that doesn't, the volume doesn't trade at the same level, that's the beginning of your wedge, right? So if the volume at this doesn't trade at a higher price, then your wedge has begun. Now, if that does, then you're just going to keep going up, right? Like if this candle ends up trading there above the previous candle, right? Not the wicks, but the candle. Then the next candle is also just going to trade up, right? Or within, and then your wedge can begin. So you're looking for that volume on price there. Hambandown's defense. I already had that Reddit article. That's fine. If you found that our Reddit article on your own, then the information contained in it is your responsibility, right? But if I provide you with that article, then that information is my responsibility. That's the difference there, Windmill. If I missed anything interesting, probably. Oh, this is a different company. That's why. I mean, everything I explained is still the same, but oh, here we go. So yeah, same thing as far as the wedges go. This was weird. This was a pump and dump. This wasn't like normal price action. Actually, so this probably won't be good to look at. Like you have wedges that formed, right? Um, but this is a pump and dump. Something happened. The SEC like stopped the trading on this or something, and it tanked. It just got sold off super quick. Also, the float is like 34 million, so even smaller than GameStop. But this is just like a pump and dump. This isn't like a natural. This isn't a squeeze, right? Like there's no peak, there's no period of stabilization. So this isn't perfect to look at. I think ironically, the other incorrect company I worked at was a better indicator of like how a run up would play out. This is very, very odd price action. This is definitely like something illegal happened here. And people got the fuck out. Or one fund pumped this up and then capitalized at exactly this point by owning the majority of shares. SEC investigation into meme stocks. Is this just theatrics? What will happen? Have to run. We'll check later. Not sure. Right. The contents of a federal investigation like that would not be available. It could be theatrics. It might not be. I don't know how serious Gensler is about creating fair, equitable markets. If he's pretty serious, it may be a very serious investigation. I will say that the SEC doesn't like to do anything. So if they're doing something, they're probably doing something. That will come with time. That will come with time and understanding of how the markets work. That those things will give you the idea of what Synthrum, what things to look for in stocks that you want to trade based on the trading system that you build for yourself. Trading systems are really like, I know everything you see in media and stuff will tell you that like, oh, everyone can learn this trading system and it works for everybody. That's bullshit. Trading systems are extremely personal, like a fingerprint. Most people will never be able to even understand. If you develop a successful system, most people won't be able to even understand how you trade it. So even if you kind of tell them or sell it to them, they're very likely to fail, even with all the pertinent information, right? Because those systems are built on how you personally understand the market. Because like, even though it's a mathematical system, again, it's ruled by emotion. Maybe you can hold longer, or you're better at timing entries, and all these things can drastically change someone's trading system. So they're very personal. I'm better with skin in the game, but very little skin. This is something I actually want to set up. I want to set up like a competition on the Dillionaires like Discord, where people can just post non-GME gains, losses, or weekly stats for their profit loss on paper trading, right? Because that skin in the game thing, no offense, Windmill, it's bullshit. It's the skin in the game is a society's pressure on you to make money, right? So that's your incentive, is to make money, and you think that having skin in the game incentivizes you to make more money or play better with that money, and it doesn't. So I'd like to set up a thing where kind of we make it like a competition. So you still have the competitive drive that the skin in the game would give you, but without using real capital, right? And maybe we could figure out some kind of like prize or something for that. But I mean, for most, I think the sake of the competition itself would be reward enough, and that ultimately will stop people from wanting to throw real money at the market when they're inexperienced and unpracticed. And you say like, I'm only going to lose $60, or I'm only going to lose 1,000, but losing that money, like if you look at your lifetime of possible capital earned, you're, by losing money, you're deducting from that, right? And the whole point of this is to make money, not lose money. Losing money is bad, right? Um, and so whether you lose 60 or 1,000 or 10,000, you've still lost, because you've insisted on using real capital to do a thing that you don't yet fully understand how to do, right? And you could just park that money somewhere and it could grow. So between the option of taking that money and making money with it, you've decided to lose it instead, to throw it in the trash. Now, if that's something you're comfortable with, that's fine. I'm not going to tell you what to do with your money, but you should think long and hard about that. Because, like, remember what me and Zakir were talking about in chat the other day, if you guys were there? If you bought Coca-Cola in 1919, right, you'd have like $10 million. Like, that would have paid for your great-grandchildren. And, like, at what? At, like, one share. One fucking share at whatever the price was back then, like $1 or something, right? So think about that. Like, if you park that $60 somewhere, that money could, you know, pay for your great grandchildren's college education. It might be $60 today, but you know, and as medical technology improves and stuff, we're gonna all start leading much longer lives, and the investment of that capital over time is going to become even more and more important moving into the future. I know that sounds out there and crazy, but it's true. Like you know, everyone's like, oh, I'm gonna plan for when I'm 75, but a lot of us in here in this chat we need to plan for being 150, right? We need to plan for being 200. Like, who knows? The rate at which, you know, gene therapy and some of these technologies are ramping up. We may be the last. Some of us may be the last generation to actually die. And if that kind of technology comes to be, and science fiction is any indicator, the people on top will definitely have better lives. Go watch Altered Carbon, or better yet, read the books. But that's not so far removed from reality. He just showed us 4 stocks that will increase 150%. So it depends on the scanner. Some scanners use algo, some are fully customizable, but you have to do a bit more digging yourself. Scanners are tricky. Scanners, you've really got to, and I need one right now, which just put me in a very unfortunate position. And then I'm using like FinViz, which is crap. But like some scanners are really worth their like weight in gold. Like the $600 a year you pay for them is worthless compared to, it's like nothing compared to how much money they can earn you. So it's really something you've got to like. They usually all offer trials of some period, and sometimes you even just have to pay. You got to pay to test it, and that sucks. But you got it's worth every penny once you find a good one. I had a really good one for a long time. I'm not liking it anymore. They've made some fundamental changes and opened it up more to the public. That's another issue, is more and more people climb on the platform, the more you're going to start to get front run, and you don't want that. So like everything in the market, take your time with it. KO. One of my answers is a shitpost. Kraft Heinz has been the only stock other than GME mentioned as a possible play. IIRC. No, that's not true. I've talked about SPXS. I've talked about UVXY. We made some money over on CLNE. Some of us did. Money was made by other people on BlackBerry, but not me. I mean, we're always doing small things, right? I'm not just gonna like start day trading on camera, right? Like, the purpose of this stream is currently not that. GMED has entered the chat. Gonna be hard to preach responsibility when you're walking around with a $3,000 perm. I disagree, right? Like, if we look at that from a market perspective, I just got paid $3,000 to do a thing that I probably would have done anyway. That's like paying McDonald's $3,000 for a Big Mac. Like, they'll take the money and give you a Big Mac. I don't want to get a perm. I don't like going to salons or having people fuck with my hair. So there's like personal reasons, but purely financially, great bet, right? Like, I risk what? Embarrassment? I'm not even embarrassed. I will rock a perm. I don't give a shit. And I'll look probably pretty damn good. All I thought about was the perm. Late to the stream, but hope the stream has been as lit as the last day. I don't know. I feel like I'm giving out good stuff. Yes, AP, that's correct. At least 6 months. And I recommend far longer if you want to make it a full-time profession of any sort. We should find out how WSB paper trading game works. That seems to be super popular and works out well. I've never done that one. I think it's over, isn't it? Like, they already did it this year. I'd like it to be, since the membership is not for people intended to become. No, I would definitely like, and I know we have a lot of Long Johnsons in here, and if you are serious about trading and that's something you want to do, I do recommend becoming a Dillionaire. I do keep the cost prohibitive for a reason, right? If you because if we get too many people in there, it's going to turn into a shit show, and it's going to turn into like a group echo chamber, and you guys are just going to start pumping and dumping stocks and doing stupid shit. And like it's much better to keep a small focused group that has the same mindset. And if the only thing I can do is create a cost barrier to that entry, that's what I have to do, right? In order to maintain an interested party. Because I've been in ones that are like, $10 a month, like and the benefit of those is it's kind of like a live scanner, right? Like, people are like, oh, look at this stock or look at this stock, and you can just like type in tickers all day and like look at things that have already run. But like, it just kind of turns into a shit show when too many people get in there. And although I think $25 a month probably isn't cost prohibitive enough, it's enough to like make it at least a smaller group. And then we have, division of the channels, and that's going to divide people up as different people are interested in investing in different ways. How often do you fail your trades? Not very often. I have a pretty high profitability rate, or at least win rate. Like, just because you always win doesn't mean you always win a lot, right? I might make 10 trades to make $150, like some days. Like, some days you got to really work for the money. Some days you don't. Whoa, dude. And if I ever really do like a serious day trading thing, I will create another level of membership above Dillionaire somehow, because I would want even fewer people involved in that. But I don't think that's something that I'm super interested in doing. Thank you so much for the donation, Han Banan. Medical expenses already. Here's a tip, Ryan. Not financial advice, but fuck them. Fuck them right in the ass. Don't pay it, because they can't do shit about it. Like, if you need the credit for something, Like, you need your credit score to be perfect? Sure. Otherwise, wait 7 years. Field devoted to this idea. I've seen In Time. Altered Carbon's way better. It's a more realistic approach to like what we could see, I think. Before somebody even begins their paper, you can start paper trading right away. I think some people, I know people that don't know shit about technical analysis. They don't know shit about math, and they're very successful traders. Some people are intuitively good at trading. Their intuition drives them, and they what they see in the charts is enough for them just to be successful traders. One guy I know, he was in a group when I joined when I first started paper trading, and I got to be like kind of okay friends with. He makes probably about 1.5 million a year. He only trades one season, right? And he lives very comfortably. And he doesn't know a goddamn thing. I got talking to the guy. I was like so impressed with his numbers he was posting. I was like, hey man, like I'd really like to, pick up whatever information you have that I don't. And kind of maybe if I could sit in on some of your trading sessions vis-a-vis like Skype or Zoom. It was Skype at the time, but and he was like, yeah, sure. And I sat in with him, and he just knew nothing. He made bad trades, and they worked out for him, and it made no sense whatsoever. And I'd never been more bewildered, right? And like he saw things that there was no mathematical or fundamental reason to see, right? And like he traded, and ultimately, like with experience and time, I learned that he had learned to trade the psychology of the market, right? You don't have to trade them. You may not even be good at trading the math. You might suck at math. You might not be good at understanding profit over earnings or EBITDA or like understanding the fundamentals of a company. You may not understand technical analysis. He sure as hell didn't. But he understood the psychology of the way he understood the way people think and the way people buy stocks and when they invest and when they pull their money out. And he knew how to ride those waves. And he paper traded. This guy paper traded for 10 years as a hobby before he ever decided to start trading. He retired from his job and he's like, oh, I'm going to start trading. I've been doing this like for fun. Let me put some actual money into it. And I think he is one of the best examples I have of how valuable paper trading can be for some people. So yeah, you don't have to wait to paper trade. It's free. Just do it. Try to beat your high score, Nobody has to die forever. Have I told you about my friend Jesus? Well, I would have to think any of that is real first. If you can sell me on that, you're the best salesperson in the world. Money well spent. Some of those people that donated to that, I don't even like the guys who donated big money. I've never seen them in chat. They're not members. I have no idea where they came from. I had people message me and they're like, I think these people are like shills. Like, what the hell is going on here? I don't know. Maybe they're, if they are, their goal is to discredit me or make me look silly. I don't care. I'll take their money and look silly if I so choose. The debt bothers me. I can't stand owing people money. And my credit score is 799. I mean, I guess I understand. Like everyone's raised in America. We're all raised with that mentality, right? That like we have to work hard, and when someone performs a service for us, we owe them money, right? Um, but back when I have a good story about that. Back when I was in college, I was transferring between schools, so I was completing my major, or well, I was taking courses in a major for my major for one semester at a different university. And in that transfer, I lost my student health insurance, and wouldn't you know it, I had an emergency appendectomy. In that time frame, where I was like this like 2 week period where I was uncovered, and it was like 200 something $1,000, a couple days stay in the hospital. uh now what do I do there, right? Like neither insurance company is going to cover it. I argued it to the ends of the earth. Do I pay that off? Do I let it just kind of hammer my credit for a little while? I mean, medical debt doesn't really hammer your credit anyway if you understand debt, like debt collection and credit ratings. They don't really weigh medical debt very heavily. But do I pay them? Do I let the state eat it, or their own their like loss insurance eat it? Yeah. Right, to take 2 years out of my life to pay back. I mean, like, yeah, it saved my life probably. Like, if I hadn't been able to get the surgery, but like, do I owe them? I don't know. Probably not. Did it actually cost that much to take my appendix out? Definitely not. That was more than 7 years ago. It's not on my credit anymore, but you know, I paid some of the fees. Like I paid the surgeon off. You know, he's the one who saved my life, so I figured he deserved to get paid. Did I pay the hospital, $55,000 a day for me to sleep in a fucking bed? No. We don't have like debtor's prison here. It's not like you can go to jail for not paying them. They can't do shit except kind of call you a bunch. In most states, they can't even garnish your wages. And they sell that debt, right? Like they're making profit on that debt. If 2008 taught us anything, that debt is very profitable. Those toxic assets get bundled up and sold to other companies, and then sold and sold and rehypothecated throughout the debt infrastructure system. That debt is an asset to them. Do you really want to pay off the people that are making money off of your own anguish? Low key whales lurking in pickle chat. Like old poor people, we know this, right? Old poor knows. It's like if you owe someone money and you can't pay them, fuck them. That's good, windmill. I mean, to each their own. I'm not going to tell you how to do it. All I can tell you is the way I think is best to do it. Maybe I'm really against the books, and a lot of the YouTube shit. This is kind of a problem for me in advising, like trying to help educate you guys in this stuff. Is that the books are mostly scams, written by unsuccessful traders who were like, "Fuck, yeah, I invested all this time. How do I make money off this?" And then the YouTube shit is also mostly like it's always missing a lot of information or incomplete. There's a few things I found, but you know what? I think I will. That way, over time, as I come across things that I feel like have actual value, I can just share those. Somewhere in storage, I have a list of all the research I did when I first started out. Like I physically like wrote down like the YouTube videos and the web articles and like kept them all on paper. That way, if I ever had to go back and find them again, I could. As I like upgrade my computer every year, and I generally just chuck the old hard drive after destroying it. So, not very responsible with my long-term data. But yeah, maybe I'll start like just a closed YouTube channel where I can like, if I come across a video or an article or any information that I find really relevant, I can share that. I'll tell you what I tell everyone though. Go to Investopedia and just start looking shit up. Look up everything you feasibly can. Investopedia might be one of the best open sources of investment information that you could ever come across. And like, while it won't tell you how to invest or what to do, once you can start defining everything that's happening, you put yourself in a much more strategically advanced position. Yeah, it's really hard for people in Europe to comprehend the way our, or most of the civilized world to comprehend the way our medical system works. See, debt to your family is a bit different. Like, I would pay that off, right? Like, if I owed, like, a mother-in-law, like in your instance, that's totally like I don't borrow money from friends. I have a pretty strong rule about that, but yeah. I would move to a more progressive country. I mean, I don't know. I don't really have those same kind of attachments, Ryan. So I guess maybe it's easier for me to weigh in on these things in my perspective because I don't ascribe to that same set of values. If we find some we could share. Uh See, I don't like that so much, Cesseron. Like if you guys find some you can share in general chat where it reaches like a limited audience, but like maybe you could send them DM them to me if you find some and then I could review them and then possibly post them there if I think that if in my judgment that they're giving useful information or correct information. Maybe that's a way to do it. There does have to be like some sort of stopgap there. I hoard my data. I'm usually the friend that gets borrowed from. If you're a property owner, a creditor, or anyone you owe money to, i.e., a professional service, can file a lien against your property so that you can't sell or mortgage it until the debt is paid off. Yeah, that's true. That's why like. I mean, that's one of the many reasons I stay liquid, right? Can't have my cash. Also, it depends on the state. Different states have different laws as far as property liens are concerned. In some states, it's very, very hard to do that, depending on what the service is for. That is why a title lawyer is very important. That's also why title companies are insured. I did make it to the bottom of chat, and I'm very proud of myself with 6 minutes to go. So it looks like I might actually end the stream right on time this week. Which I'm pretty excited about. And then I can go get my perm. It's a pickle market close. No, that's called this. I called like 20 salons yesterday. All of them, the closest booking was 3 weeks, which I just found unacceptable. So maybe I'll just go to fucking Supercuts. According to the terms of the agreement, unless I get $500 a day, I can cut my hair the next day. So it's not like I have to keep it for a long time. Although I am worried about the chemicals and like I have some people in my house with health issues. $3 weeks is insane. I live in a very populated area, Smux Fox. And also they just like within the last month opened all the businesses up. And so like everything like that is slammed. I think that, but I know where to go to get it done quicker. I just have to go away from my general vicinity. Friday could be a breakout from the cup and it could be. Yeah, it could be Tarek. It's if it is, it's a very slow one. Usually the breakouts from cup and handles are pretty quick, but we'll see. If you're looking at a long-term cup and handle like that, like the downtrend can carry on for a while, right? Like we could actually take a quick look at that. Is it on the daily or the 4-hour? That's not GME. Give me my actual stock, please. Thank you. So, if we are looking at a cup and handle here, now my Epic Pen's working great again. By the way, I don't know what happened there. Yeah, this could be the handle, but this handle could continue on, right? Like before it breaks out. Unlikely. As I think most of our pressure is upwards at this point. We could just see a move back into this channel and then a breakout. Cup and handles, though, I know they're like one of the first ones you learn about. They are really kind of unreliable. And in the event where one forms, there's usually a better technical indicator that you can find to support your thesis, like a more accurate one. Like that'll support that breakout more so. Like a cup and handles, cup and handles, the only time I've really used them is if I'm looking at like long-term charts, right? And I come across one. Like I'm just like looking at flipping through charts and I come across one and I'm like, oh, there's a cup and handle. And then I'll dive deeper into it, right? And look for other technical indicators. But I won't be like, oh, there's a cup and handle, I'm going to play it. If that makes sense. Quick question, do you think that so I hope that answers your question, Tarek. But yeah, it could be. There's no reason to assume it's not currently. Like it's a very clean one, if it is one. The neatness of a cup and handle is overall, the overall formation's correctness, is very important in their reliability to break out. And this is a very nice cup and handle pattern. There's a way to draw them on here, but I don't know how, as I haven't drawn cup and handles on WeBull yet. But there's a way where you can like actually draw out the indicator and ensure that it's within the range of probability. Obviously not something I could do with the Epic Pen, as it's not super accurate. I'm gonna go broke paying $500 a day, but I'll do it. Don't do that to keep me permed. It's ridiculous. Upstate it is. Now you're getting it. Have you ever seen 10-year cup on MBIS? No. Is there one? That seems ridiculously long. That might be too long for it to even be relevant. What's my next big prediction? I don't know. Every time I dive into GME, though, I'm able to find some new shit. So we'll see what happens this time. I feel like eventually I've got to like run out of new things to tell you guys. Like I'm going on like 8 weeks now of having groundbreaking revelations every weekend. Like I don't know how many more I can have. Before we're done, before we're done, do you think we'll have mostly sideways action until later in the month? No, I don't think so, Ryan. I think if the sale's over, this if you guys want to know what I'm predicting for this week, is that we've hit a turnaround on this lower trend line, right? So this deviation in the trend line here, this is probably what will be mostly written about in my TA this weekend. This deviation in the trend line here indicates that sale of 5 million shares, right? And now we're turning back around to reform our pattern. Because I don't think that anything is going to disrupt this pattern of increasingly inflated short shares, right? Like even on the days, like these guys are so entrenched in their position, right? You have to understand this, that even on the day where GME is like, here are 5 million real shares, these fuckers still aren't covering. Like I truly believe they're in a position that they cannot. There is no, that's like, everyone's like, why don't they cover? Because they can't. There's no covering that's going to happen here. It's just covering equals bankruptcy. End of story. Bankruptcy, liquidation, lawsuits. There's no covering. Now, dragging it on, maybe they can still run a profitable business while carrying the ever increasing cost of GME. Maybe they've done the analysis and they're like, maybe we can hold this for like 5 years, as long as we, margin in like another 18% profit that per year that this position is going to continue to cost us, right? Like that's what you would have to do in a position like this. When you're just trapped, you have to accept the loss, but like maybe they found a way to accept that loss in a cheaper way. But the issue with that is that cost is increasing exponentially. So like maybe if they can make an extra 18% profit, these numbers are completely theoretical and have no basis in fact, but I'm just using them as an example. So maybe this year, if they can make an extra 18% profit off all their other business, they can cover the GME position, right? But next year they might have to make like 35% more or 45% more, right? So it's just this like countdown to like doomsday for them, and all they can do is kind of offset it. But yeah, there's no covering. That as far as I'm still concerned, that what we've experienced the last couple of days is a sell-off and doesn't affect the overall thesis at all. All right, I'm gonna stop questions at 2:05, and then I will finish answering them and end the stream because I do have a bunch of shit to do this weekend. And I was up till like 2 in the morning last night editing videos. Mostly because I suck at it, but I promise I'm working on finding a way to get better. Apparently resetting my computer fixed my tablet. Whatever driver issue I was having with it was fixed upon reset. But I couldn't reset it because I was streaming yesterday. Someone on Discord is scamming people in DMs. Can someone just notify Zakir? He's a moderator. He can ban them. Give him the person's information or whatever. Yeah, if anybody reaches out to you with any kind of opportunities or tries to get money out of you, out of the Discord, it's a scam. You guys are probably all internet literate enough to know this, but in no way would I ever recommend that any of my following or viewership advise each other in any way on any investment or ask for money or anything like that. I like your stuff. I like Crean's stuff. Who the fuck is Crean? Is that the Elliott Wave guy? Or is he the T plus guy? Actually, came across like an okay T plus article today, but now I've lost it. Oh well. Like I wonder actually, like it was one I actually wanted to read. Like they cited information. It was amazing. Well, I'm two of those things, Seacraft, but thank you. Is quadruple riching still a thing in June? I think so. I don't know. I've never paid that much attention to quadruple witching. Generally, not a lot happens. Like it's always way overhyped, or it's just only affects very specific things. Yeah, if they wanted to cover, they would have covered at 20. That's correct. I think at that point they were already over 100% of the float, so covering wasn't an option. And at that time, there was a ton of institutional ownership. You want to talk about trying to get shares away from people? It's probably overall easier to get shares away from uh, retail than it is to get them away from, like, the amount of institutional ownership GME had at that time was quite large. It's less now, but now it's got like a ton of retail ownership, most of which is committed to holding forever. So it's like, yeah, they're just fucked, and it's, sucks for them. Yeah, or DM me that person's information and I'll delete them immediately after this chat. I'll ban them from the channel. We're going to see that as the Discord's linked on the YouTube. There's just no way to avoid it. Unless I make it private only. Yeah, Han, I'll look into having my friend set you up as a moderator. He's the one who kind of runs the Discord. In his free time. It's like an unpaid endeavor, but he's the one who set up everything on there and like programs the bot and does all that shit, so I don't have to worry about it. But I can do things on there if I have to. I just don't know how to moderate people. Thank you, Alethea. Just a lot of T plus. Yeah, I thought he was T plus. All good, Seacraft. Glad you're in here, man. Getting language practice. How many viewers today, guys? Can't see on mobile. I could tell you. We hit like 41. Still like a very small percentage of the people with memberships, but it's better than last week. I think we were at like 36. It's cool, right? It gives me more time to focus on you guys that are really interested. Like, while I appreciate the support from everyone, it's really huge because I do take time away to do this with everybody for my actual job. Um and yeah, without your guys' support, that wouldn't be possible. So thank you all so much for yet another week of you guys hanging out, watching, and learning stuff with me if you do, and supporting the channel if you believe in the cause and or find value in the information that I'm able to give you. I thank you guys all so much, as you are collectively like my largest group of supporters. Enjoy our investments in Perm. Those are around town. My phone broke last night, so I couldn't listen in. I'm sorry, Aaron. Well, yeah. The stream's gonna get uploaded immediately after this onto the community tab on the YouTube, and if you guys want to go back over it, or watch it again in the future, it's gonna be there for you. Yes, Pickle Lub. Thank you all so much. All right, guys, I am going to take off. I will attempt to enjoy the rest of my weekend. I got a lot of work to do before Monday, But I'll see you all Monday morning at 9 a.m. Keep an eye out for my DD over the weekend. Peace out, guys.